Have you ever been in a situation where you wished you had more financial knowledge? Hi, I'm Kristine Lidstone, and in this video, I will interview one of our financial experts at VantageOne Credit Union. At VantageOne, we want to increase your financial literacy so you can make smart, informed financial decisions. I'd like to introduce VantageOne's wealth advisor, Colin Karpowich, who will give us some insight on going from an RRSP to a RRIF. Welcome, Colin.
Hi, Kristine.
Colin, many Canadians save for their retirement using RRSPs. What happens when they retire?
That's true, Kristine. The Registered Retirement Savings Plan, or RRSP, is one of the pillars of retirement for Canadians. When we retire, we need to convert our savings, our RRSP nest egg, into a regular, dependable income stream. And we do this by transferring it into a RRIF, a Registered Retirement Income Fund.
Okay, and Colin, how is that done?
Well, your account manager or advisor will guide you through the process, and it usually just requires a form or two.
How much income will a RRIF provide, and how is it paid?
You've got a lot of flexibility to set and structure your RRIF payments, but it does depend upon a few variables. Most importantly, how much have you saved? But we would also need to consider how long you would like to receive payments from your RRIF. Canadians are living much longer now and may spend 25 or 30 years or more in retirement. Making sure we don't outlive our savings is an important consideration and a key concern for many of us. We call this longevity risk.
Colin, what else can impact our RRIF income?
The rate of return we receive in our RRIF is also important, but the amount of volatility in the sequence of returns can have even more impact. Have a look at this. If your RRIF suffers a significant and prolonged decline in the early years, it may be permanently impaired and unable to meet your future retirement needs. This is why many advisors recommend a lower risk strategy to protect against such an undesirable result. Many Canadians don't have a company pension plan, so their RRIF needs to do the job of a pension, and we should treat it as such.
Explain to me what is meant by a minimum RRIF payment, Colin?
Of course. Canada Revenue Agency requires RRIF holders to take a minimum withdrawal every year, starting in the year following transfer into a RRIF. It's calculated by multiplying the balance in your RRIF on January 1st by a percentage relating to your age. For example, if your RRIF balance on January 1st was exactly $100,000 and you were 65 years old, you would be required to withdraw at least 4% that year, or $4,000. You may take it as a lump sum if you prefer, or like many in regular monthly payments. The percentage increases each year as we age, so that by age 70, we must withdraw 5%, and at age 80, 6.82. There is no upper limit on withdrawals for regular RRIFs, however. You can convert your RRSP to a RRIF at any time, but you must convert it no later than the end of the year in which you turn 71.
Colin, what other things should we consider when we start to draw income from our RRIF?
First of all, it's important to remember that your RRIF income is fully taxable. Your financial institution will issue a T4 RRIF each year for the total amount of RRIF income paid. So you may want to consult your tax advisor to ensure that you're drawing your RRIF income in a tax-efficient manner, giving consideration to all other sources of retirement income. Ideally, we want to pay far less tax drawing our money out than the amount of tax we saved putting it in.
Right.
And finally, Kristine, work with a professional. VantageOne has many experienced and knowledgeable account managers and advisors who can help you navigate a successful transition to retirement and can customize your RRIF to suit your unique circumstances.
Thank you so much, Colin, for talking with us today about some of these complicated issues and making them much easier to understand. Thank you so much.
My pleasure, Kristine. We're always happy to help here at VantageOne. Just call your favorite account manager or advisor. And if you have any further questions, we're always here.